So welcome back. In our previous video, we looked at market structure, identifying the lower lows, the lower highs, the higher highs, and the higher lows. So quickly, we'll be going to our real charts to be able to identify those key areas, those areas of higher lows, higher highs, and all that. So from this, we can see that at this point, so from this point to all the way here, the market has been in an uptrend. The market has been in an uptrend. Meanwhile, from I come in, enlarge this. Yeah. Then from this point downwards, the market has been in a downtrend. So we have our uptrend and then we have our downtrend. So we identifying the higher highs in the market, the higher lows, and then the break of structure also. So these are the three things to be identifying in this market quickly, so that we'll be able to identify it ourselves and then be able to understand what the market is always doing. This will be a higher low. Okay, so let's zoom in a bit so that we'll be able to see the picture very well. Okay. Now, from our understanding, like I told us, it's unlike when I was explaining, it shouldn't be picture perfect for you to be able to see that the market is an uptrend, downtrend, consolidating, and all that. So now this is a live example on our chart. So from here we have our higher, this is the market movement. You can see all these parts now was a consolidating area. All this part market was consolidating, and then we now have this. So you can see that the market is in an uptrend, basically. Up to this was the last point where we have our uptrend. So based on this, we can now say this is our higher high and then our higher low, higher high, higher high, higher high, and then higher high. Now we won't refer to this as a higher high because it is not higher than this. It is not higher than this high. So you can't refer to this as a higher high. So now this is where your experiences begin. Though if we look at a lower time frame, this is 2 hours time frame. Now on a lower time frame, this will certainly be a higher high. But based on the fact that we're working with a 2 hour time frame, this cannot be referred to as what a higher high. So we now have a higher lows here, a higher low. Now if you check, this is an equal low with this. It is still higher. This is still a higher low here because it is lower than this one, but almost an equal low. So even this too won't refer to it as a higher low, because when we have a higher high and then the moment you create a higher low, you're expecting a higher high, not a higher low. So all these are just price movements on the higher to create the higher high. Because if we now check on the higher time frame this time around, we'll see that all this move might just be a single candle. So this is our higher low and then our higher high. Yeah. And then this will now be our what? Higher low. So this is basically the market structure in an uptrend. Now you can see that this place failed to create a new, because after creating this higher low, we are expecting price to go up to create a higher high. But instead, it has now created what? A lower high for us. That's created a lower high, which tells us the market is in what? A downtrend. Because it has failed to create a higher high, which is at this point. You can see this was the last high, the swing high, what's known as swing high, and then price failed to go up to create a new higher high, but rather created a lower high. So this tells us that the market is now in a what? in a downtrend. The market is now in a downtrend. So meanwhile, at all these levels, we have our break of structures at this level. This is the first break of structure. This is also a break of structure. Remember, I told us when the price goes to break a previous higher high, then we've said to incur a what? A new higher high. So you can say at all these levels, these are what? Break of structures. These are break of structures. And these break of structures help us to know what to do in the market. They help inform us as to where we should be looking to take out trade, where we should be looking to exit the market from, and all that. So this is basically what a market structure will look like in an uptrend. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then break of structure, break of structures. And then for the downtrend, we now have this. We have a lower high. So the next thing we'll be looking out for is what? The lower low, which is invariably this move here. This is our lower low. And then we now have another lower high here. Yes, it is lower than this high. And then we have this lower low here, which is lower than this. You can see that price is still giving us another lower high here because they are both at the same level. It has not broken this lower high here. They are still at the same level. And then you can see that this points to as it failed to break this lower high. So we might begin to see it was a higher low here. I begin to see a higher low here because it is lower, it is higher than the previous low. I begin to, so if this should go up to break this lower high, then this higher low is confirmed. But if it continues to go down, then we'll know that yes, we are still on a downtrend. So when you're able to identify the market structure, you're able to tell if the market is in a downtrend or an uptrend, it will be able to inform you as to where you should be looking out to take your trade and if you should be looking to buy or sell. I remember all this is impulsive, and then this move here, sorry, I'm coming. Anyway, this tool keeps going out. So you see, all this move here is a corrective move. Now this is the impulsive move. You can see how large the impulse. This is impulsive. You can see how large, how consistent the impulsive move. While the corrective move is very short, and we have the impulsive move. Then you can see corrective move again. Then you can now see impulsive move. So at every point in time, when you're able to identify if the market is an uptrend or a downtrend, it tells you whether you should be going long, short, or whether you should be buying the market or selling the market. So in the downtrend market, which is from this point downwards, it won't be ideal for you to be looking for what? For buys. Now, you can see that even if you had sold at this point, your drawdown won't be as much as if you had bought from this point because the market is what? Going down. So your ability to identify when the market is an uptrend or downtrend will really help inform you as to what to expect and what to do in the market. So this is the conclusion of market structure. There are still quite a lot in between that require more in-depth study and all that. So stay tuned as we continue to upload more educative and more interesting content as to help inform your decision in becoming a consistent trader. Welcome to Flamezacademy. Stay tuned. Don't forget to subscribe and don't forget to hit the notification bell to get notified of all our content as they come your way. You have a lovely day.